Hi, everybody. Thanks for joining me. Before we get started, please click subscribe to my channel to keep up with all of my latest investing and personal finance content. And check out the link you see on your screen right now for a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So, generally, every stock I buy with the intention of holding it, not necessarily forever, but for a long time. But sometimes your investments just don't work out. No matter how good you are, even the best investors, Warren Buffett sells stocks all the time and for a variety of reasons. Sometimes your investments just don't work out. So, I'm going to give you a kind of an inside look at my portfolio and what I'm planning to sell this year. Normally, I talk about stocks I like to buy, but there are two in particular that I'm thinking of cutting my losses on and moving on. So, number one is a company called Latch. This was one of the companies that went public in the SPAC craze of the past couple of years, and it's down 90% from where I bought it. I am planning on selling this and using the gains as a tax loss and just moving on. So, why did I like Latch in the first place? Obviously, hindsight's 2020 when it comes to some of these SPAC IPOs, but the business looked really impressive on the surface. It used a combination of a software as a service platform and a hardware business where they make their own proprietary smart home hardware for apartment buildings, office buildings, commercial real estate in general. That was a big differentiator from the competition. There are other companies, Smart Rent is one of them that uses a kind of software type based operating system for commercial properties, but it's compatible with all sorts of hardware. Their hardware is not proprietary, and that was a big thing that attracted me to Latch. They also had a ton of cash that they raised in their SPAC IPO that they were using to grow, and the growth trajectory was pretty strong. Still is in a lot of ways. The business continues to do well in certain ways, forming partnerships and things like that. They just partnered with WeWork to provide technology to their properties, for example. But what went wrong? So there are two big reasons I'm pulling the plug on Latch, even though it's down 90%. And my downside potential is pretty limited at this point. It was a very small investment for me, so this is just it's not a big sale in the context of my portfolio, um, but I'm ready to move on. Latch's path to profitability looks really tough right now. It was a different market environment when Latch went public. It was really easy to raise capital at high valuations. Latch is a money losing business. It is not even close to being profitable right now. That was okay if it's growing over 100% year over year and it's essentially free to get extra capital, which it was for a long time there. Um, so the just kind of cost of capital is a big concern right now. And the biggest concern in my mind is that Latch hasn't reported numbers in 2 quarters now. They delayed their second quarter report earlier this year, saying that there were some accounting inconsistencies they were looking into, and they still haven't released either second quarter or third quarter reports. I don't do accounting issues. Um, Most investors don't either. It's something that is a big red flag. If a company says we have some discrepancies in our accounting, 90% down or not, it's a sign to run in the other direction in most cases. And that's exactly what I plan to do here. Second stock I plan to sell is Zillow, the big real estate company. This might surprise a lot of people because real estate is my favorite sector of the stock market, down 64% from where I bought it. And I bought it because for a couple of reasons. One, I love buying market leaders. Zillow is by far the leader when it comes to traffic on a real estate platform. They've billions of views, over 200 million active users, big platform. And my kind of thesis was that they could leverage that data in their favor, particularly when it came to iBuying. 2021 was arguably the best market to be an iBuyer ever. The companies like Open Door and OfferPad, but great market environment for that. Those companies were able to do much better than Zillow. That's really what went wrong for me. It wasn't just that they exited the iBuying business. If they had just said, we want to focus on our core real estate business, which is profitable, and iBuying is just not for us, then fine. They messed up iBuying so badly, it was losing billions of dollars. And it was not just that it wasn't a great business model, is that they weren't able to do it as well as some of their other companies that didn't have their data advantage. Opendoor and OfferPad had much less data when it came to consumer home buying activity than Zillow did. They've been developing the Zestimate for well over a decade now. The fact that they couldn't leverage that data to be a better iBuyer than the others was a big red flag to me. Um, their new vision is to create kind of what they call the super app for real estate. I'm just not seeing it, and I think that it's going to be a big heavy lift for them. I think there are better opportunities in real estate, both in the real estate technology department. I recently bought some shares of Redfin, for example, and in home building, which I think is a big opportunity going forward as the economy starts to recover eventually. I bought some home builder stocks as well. So I'm planning on getting rid of both Latch and Zillow, freeing up that capital that I feel could be better used in other opportunities right now. Thanks so much for watching. Please hit subscribe to my channel. And I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You know how much I love researching new stocks, obviously from this video, and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. So go to fool.com/Frankel to get your 10 stock picks right now. The Motley Fool Stock Advisor returns are 354% as of September 21st, 2022, and are measured against the S&P 500's returns of 112% as of September 21st, 2022.